sausage. Hi guys, I'm just going to give you a few seconds to enter the room, and look, as usual, we'll get this underway. Okay. Hi, Karu. Oh, I'm so terrible with names. I'm so sorry, Caro. I hope I pronounced your name right. Hi, nice to. Glad you're here. Okay, so let's get this started. Look, welcome. A very good evening to you from the UK's evening, anyway. Good afternoon, good morning from wherever you're from, joining us from. Look, from me and from myself and the FP Markets team, thank you for joining us today for this presentation on the Macd. How to interpret the Macd and apply it to the charts. So I can assure you by the end of this webinar, you will be more confident. Good evening. You will be more confident with the Macd indicator and have enough knowledge to begin applying it to the chart with confidence. Guys, just really quickly, if you can just let me know if I'm coming across loud and clear and you can hear me. And also the welcome slide is visible. Seem to be having problems with my mouse again. Every time I turn Zoom on, I have problems with my mouse. I'm not sure why. And it's frozen. Sorry about this, guys. If you could just let me know if I'm coming across loud and clear in the chat box. Y or N for yes and no. That would be great. Thank you, guys. Sorry about this, guys. Right. Okay. Look. By way of an introduction, my name's Aaron Hill, and I am one of the market analysts here at FP Markets. I have more than 12 years trading experience in the financial markets, and thank you, guys. Thank you for letting me know you can hear me, and the video is visible. Excellent. Thank you. Brilliant. So, as I said, my name's Aaron Hill. I've been involved in the financial markets for more than a decade now. Mainly in technical analysis, but I have a keen interest in fundamental analysis as well. So yeah, that's really me. If you have any questions during the presentation, please do ask away or wait till the end and we can address them then. Alternatively, guys, look, feel free to send your questions to the to us, to the research team at marketanalyst@fpmarkets.com, or alternatively, you can contact the support team, guys, as you can see in the chat box, support@fpmarkets.com. Right. Look, guys, quick look at the disclaimer. Look, trade responsibly, guys. That's a given, right? So derivative products are highly leveraged, which we should all know about before we even engage in live trading. They carry a high level of risk and are not suitable for all investors. Features of our products, including fees and charges, are outlined in the relevant legal documents available on our website. Look, guys, I must be clear regarding a recording for this presentation. This will be available through either our the FP Markets YouTube channel, which is you can easily find through a quick search, or just click on the link in the chat box, or alternatively, head over to our main website through this link again. And or not through this link, but you can head over to the main website, and it's under the main menu, and you can find it under resources, and you have access to all the archived webinars. And yeah, and you also have access to all of the speakers that regularly present FP Markets and things like that. So and also the upcoming webinars as well, guys. So let's crack on for this evening's presentation. Right, so as you can see on the screen, introduction to the Macd. So introduction to the Macd. Here I'll be talking about the very, very basics, but then move on to the Macd formula, which is really quite a straightforward calculation in comparison to the RSI and things like that. Macd strategies, we'll be looking at the basics of those. And Macd Convergence with other tools is something. So when I say other tools, I'm talking about technical tools such as support and resistance and things like that. Okay, so look, moving average, convergence, divergence. I know this is a bit of a mouthful, but regularly you will hear other traders and analysts speak about the moving average, convergence, divergence. Sorry, what they'll say is so instead of saying moving average, convergence, divergence, it's often just pronounced as Macd, so or MACD. Look, I think the indicator was developed. I don't think I know. So the indicator was developed by a gentleman who goes by the name of Gerald Appel in the late 70s. I think it was 1979 to be precise. And look, it certainly stood the test of time. As you can see on the screen, guys, we have the Macd in all its artistic beauty here. So this is a chart. I believe this is a daily chart. So on the lower panel, we have the daily Macd. So look, the Macd offers the best of both worlds in that it's really a trend following indicator and also acts as a momentum oscillator. Now, for anyone that's completely new to trading or investing, this is likely to be confusing. I understand that trend following, what's that? Momentum oscillators, I get that. I understand that it may be confusing. So the Macd essentially shows a relationship between two moving averages of an asset's price and is really what I would consider to be, it's mostly a lagging indicator that we are working with because it's based on moving averages. Now, for anyone that's been around the markets for even a few months, you will have heard of the moving average, and no doubt you've looked into that. So a moving average is simply an average price taken from previous price action, and the average is calculated based on the previous price action over a specified period. So a lagging indicator. A lagging indicator is a tool that provides delayed feedback. Now, which means it gives a signal once the price movement has already passed or is in progress of movement. These are used by traders to confirm the price trend before they enter a trade. However, it has been argued that there are other components to the Macd that provide traders with different opportunities. So look, so the two moving averages, we have the signal line and we have the Macd line, are invariably, as I've said, lagging indicators. So on the chart here, you have the Macd line and you have the signal line. So the Macd line is in blue, the signal line is in orange. Do not worry, guys, we will go over this more in detail as we progress. So, so look, but the Macd histogram. So can you see the histogram here? We have the red bars and the green bars. This is a histogram centered around a zero line. As you can see, the zero line is here. The histogram represents the difference between these two lines. Look, it's pretty simple stuff, guys. As these two moving averages deviate from one another, you can see these red bars getting larger. As you can see, the largest deviation is around this point, and the bar is huge. But as it starts merging, as the moving averages begin merging, there you'll see the Macd histogram gravitating back to the signal line. So we'll go over this in more detail shortly. Look, some traders do say this is not a leading indicator. No, I do totally understand that. But for me, there really is a leading component to it, as you can look for divergences, right? So you can look for divergences between the peaks of the Macd and also on the Macd histogram. Now, the Macd fluctuates. Overall, the Macd fluctuates below and above a zero line. As you can see here, as I've already highlighted, we have a zero line, we have the Macd and the signal line, and we have the Macd histogram. The four components you really need to understand. And as I said, the Macd fluctuates above and below a zero line. Just to give you a taste of what's to come, on the MACD, we can look for signal line crossovers, center line crossover. So center line, what I'm referring to here is the 0 line, and also divergences to generate signals. Now, because the MACD is unbounded, what I mean by that is, for anyone that's seen the RSI or the stochastics is bounded. I don't really use the stochastics. Yes, the stochastics is bounded. So the RSI or stochastics, you'll see that there's an upper band and there's a lower band. With the MACD, there is no upper and lower band. And many traders do say that because of this, we cannot look for overbought and oversold signals. Now, this is not really true, because you can, if you're experienced enough, you can plot support and resistances based on the indicator, okay, to determine overbought and oversold signals. Again, guys, I will go into that shortly. Again, look, we also have to take into consideration the histogram, as you can see here. Now, the histogram was actually developed by a gentleman who goes by the name of Thomas Asprey. And this was following the indicator's development, of course, in 1986. And yeah, so look, we will go into this shortly. Look, calculation, guys, bear with me. Okay, so calculation. Just so we're all on the same page and we really understand the dynamics behind what this indicator is. So again, guys, this is an indicator that's a momentum oscillator, but it really has a trend following component to it. For me, the calculation is far easier than the RSI, far easier than the RSI. For anyone that's tried to calculate the RSI, it took me, a fairly long time to actually understand how the RSI is calculated. But with the MACD, it was very simple. So the MACD line, so the first component, of course, is price change. Pretty simple stuff, guys. Price moves up and down. So we're looking at the price changes over certain periods. Then we have the MACD line. So the MACD line, as you can see here, is the difference between a 26-day EMA and a 12-day EMA. Now, an EMA is an exponential moving average. It's not a simple moving average. So an exponential moving average is simply a moving average with more weight on the most recent observation. Okay, that's all it is. Unlike a simple moving average, which has equal weights on each observation in the calculation. So the MACD line, again, the MACD line is the most important for me. The MACD line is quite simply the 26-day EMA minus the 12-day EMA, and that gives you a dynamic line that you'll see that fluctuates, oscillates between above and below a 0 line. Then we have the signal line. So we have the signal line. Now, all this is, guys, is the 9-day EMA of the MACD line. So we have the MACD line. We've calculated that. We're all happy. We have the line. It's showing on our chart. Then we just want to apply a signal line. So a signal line, again, is a 9-day EMA of the MACD line value. Okay, nothing more. Think about this. Think about we have a 10-day SMA of price action, but we want a 20-day SMA. It's exactly the same thing, guys. Really, there's nothing more to it than that. The Macd histogram. So the Macd histogram is, as you can see on the slide, is the difference between a Macd, the difference between the, where's my cursor? Let me just get the spotlight on, that'll be easier. So, okay, here we go. So the Macd histogram is the difference between the Macd line, which we've already calculated as the 26-day EMA minus the 12-day EMA. So the Macd line minus the signal line, which is, as we've already established, the 9-day EMA of the Macd line. So it's the difference between these two lines, okay? And I'll show you that on the chart as we progress. Now, if you think about it, it really takes 4 calculations to get to the histogram, to get to the final part of the calculation. So it's almost a four-stage process before we can complete this calculation. So the 12-day and 26-day EMAs, as you can see here, are calculated based on, of course, price change. This is your first calculation, right? The first calculation is derived from price, and then those two EMAs are used to calculate the signal line. The Macd line, excuse me. And then the signal line is taken from is a 9-day EMA of the Macd line. And the Macd histogram is a derivative of the signal line and the Macd line. So it's always a derivative. So the Macd line is the derivative of price. A signal line is a derivative of the Macd line. And the Macd histogram is a derivative of the signal line as well as the Macd line. Okay, so look, you don't really need to understand this really as basics, but I really, really encourage you to look into this, to the calculation. As it certainly helps you understand the what's the best way of saying this, the dynamics behind the indicator. All right, so I need to bear with me, guys. I need to get the whoa, I didn't mean to do that. Sorry, guys. I'm having a few difficulties changing the slide. Just bear with me. There we go. So just bear with me here, guys. I should just bear with me. I did have the charts, but there we go. Okay, so here we go. This is a euro-dollar chart, guys. Look, for anyone that's not been hiding under a rock, you will note that the euro-dollar is now within striking distance of parity. What this means is €1 is nearly worth the same as the US dollar. As you can see, we are now trading at $1.0056 to the euro, to €1. All right, so just bear with me. Guys, any questions before we hit the chart here? Because I will be going into detail with any questions on the calculation or anything like that before we proceed. No need to be shy, guys. You can step forward and ask questions if you like. It's not a problem at all. All right, so as I said, this is the euro dollar. This is the daily time frame. So the Macd is applied based on daily periods. Okay. Let me just zoom in, zoom in, zoom in, zoom in. All right, so the center line crossover. Let me just get the highlighter up. I think it's a better way of looking at this. Sorry, guys, I'm just trying to get the highlight. There we go. All right, so the center line crossover is the most basic signal for me, really, and as you're going to see. So just to really remind us of what we have on the Macd. So the Macd is nearly always at the bottom of the chart, applied to the bottom of. So this is your price chart. This is the Macd. As you can see, the blue line is your Macd line. Remember, the Macd line is calculated via the 26-day EMA minus the 12-day EMA. Let's zoom in so we can look at it. So this is the Macd line is the blue line. The signal line is the orange line. Simple, simple, simple stuff. Okay, so the Macd line reacts faster to price movement because, can anyone tell me, guys, if you can tell me in the chat box, why does the Macd line react faster than the signal line? If you can tell me in the chat box, that would be fantastic. I'll give you a couple of seconds. Should be a basic, very basic answer. If not, I'll all right, guys. Look, so the Macd line reacts faster because of the calculation. Remember, the Macd line is, the signal line, the orange line, is a derivative of the Macd line, right? So it's derived based on this calculation. So it's going to react slower, the orange line, the signal line, because it's based on the prior 9 periods of the Macd line. So it's taken previous price action from the Macd line. Okay, so blue line is the Macd line, and the orange line is the signal line. The zero line is marked up 0. Okay, so it's between, so that's the center of the indicator, the midpoint, the center line, whatever you want to refer to that as. And then we have the histogram, guys. Again, histogram is between the 0 line, and as you can see, for anyone that's gone through basic studies, you will know, or basic chart studies, you will know what a histogram is. As you can see here, it's made up of vertical columns around a 0 line. And the Macd line, for anyone that remembers on the calculation, is the difference between the Macd line and the signal line. So when these two lines converge, as you can see here, look at these. The Macd line and the signal line have converged. What happens here? The histogram also converges because it's measuring the difference or the spread between these two values. Here, we can see there's a large spread between the two values, and the histogram is deep in the red. But as we cross higher, the green columns begin to emerge, and the spread begin. So look, as you can see, the spread between these two values is higher, and obviously it gives you a green value here. Here you can see another one. The histogram is positive and giving really positive values here, really strong values based on the spread between these two moving averages. Okay, guys. So with that in mind, so let's kick off with the most basic. So the bullish and bearish center line crosses. When the Macd line, remember the Macd line is the blue line. Okay, so when the Macd line crosses the 0 line, you can call this a bullish or bearish, either a bullish or bearish center line crossover or a bullish or bearish 0 line crossover. Okay, so let me zoom in. So we've got a clearer view. I want to get a good, there we go. So we have here the Macd line crossing from above the 0 line, which means the 12-day EMA, because remember, the blue line is calculated via the 26-day EMA minus the 12-day EMA. And the crossing of this 0 line means the 20, look, you can see it on the chart. I have the, there we go. Right, let me just give me a second, guys. I didn't realize I could use that. That's fantastic. Okay, so this red line, as you can see, this is the this orange line here and this blue line here is actually the 12 and 26-day EMA, which is what the Macd line is calculated from. So when the orange line on the main chart, sorry, the blue line on the main chart, the main price chart above here, crosses above the blue line, sorry, the orange line, the 26-day EMA, what happens? The Macd line crosses above the 0 line here. The same can be said here. As the Macd line crosses below the 0 line here, the 12-day EMA crosses below its 26-day EMA. So look, it's nothing more than telling you that there's a moving average crossover. That's all it's really telling you. For me personally, I do not use this in my trade at all. I do not use it because all it's telling you is these moving averages are crossing over. Now, if you're a fan of crossover strategies, then by all means you can try to adopt this into your implement this in your trading strategy. But for me, it's not really telling you much other than that we have a moving average crossover. All right, so signal line crossovers. Now back onto the indicator. So a signal line crossover, it has to be the most popular way of viewing this indicator, and especially for newer traders. Newer traders, they really are attracted to the moving average crossover systems, which I was at the very beginning of my journey, should I say. I really studied moving averages quite extensively, so it's something that I'm well aware newer traders are attracted to. But look, for me personally, I would always understand price action before anything else. Price action is king, guys, because this indicator is based off what? It's based off price action. So yes, price action is the main source here, guys. If you can understand price action, there's really no need for the indicator once you become an experienced chartist. Anyway, to begin, the signal line crossover. Remember, we have a MACD line and a signal line. Again, guys, blue line is the MACD line. Orange line is the signal line. Once we get a MACD line signal, a MACD signal line crossover, as you can see, let me zoom in so we're closer. The blue line crossing the orange line is a MACD signal line crossover, okay? And that's telling us that we have a bullish signal. Okay, this is a potential, and look, it worked out beautifully here. The MACD line crossed over, but look, these are lagging indicators, guys. These are not going to get you in at the bottom or at the top or anything like that. These are lagging indicators, guys. So as you can see, the crossover here would have got you in around this candle here, maybe if you were lucky around this point here. Okay, so yes, so that's all there really is. Like the basic MA crossover we see on charts, you know, crossovers can last, depending on the time frame you select, can last anywhere from a few days to a few weeks. Again, depending on the strength of the move and also the time frame. Guys, I must emphasize that this is a lagging indicator, right? So these are these MAs are, they will lag behind price. So whatever entry you're looking for, you will always get into the trade a little later than usual. We have the added confirmation of a signal line cross. So this is a bullish signal line crossover, and this is a bearish signal line crossover. As you can see, the blue line crosses below the orange line. Bearish signal line crossover. Bullish signal line crossover. Bearish signal line crossover. Bullish signal line crossover. Okay, any questions on this, guys? Please do. Look, the best place to look for these signal line crossovers, where do you think the best place to look for these crossovers are? All you need to do is think about the RSI. Where do you look for the RSI to form a top? Overbought or oversold conditions, right? Or but the indicator is unbounded, right? We have no boundaries on this indicator. 1 second, guys. Can you use H1? Do you mean now, or do you mean on the indicator itself? Right, so the not now. Okay, yes, of course you can. Yeah, let me show you. You can use the indicator. Look, there we go, H1. All it is then measuring the, because on the daily time frame, what we're doing is we're measuring the 26-day EMAs and the 26-day EMAs and the 12-day EMAs, right? So, but on the H1, we're measuring the 26-hour EMAs and the 12-hour EMAs. That's all it is. That's all it is. We can even go right down to the here. You can go to the seconds on here, but we can go down to the 1 minute. There we go. Then you're measuring 26 minutes and 20 and 12 minutes. So as you can see, it's a very, very quick chart, this one. Okay. This indicator is available on all time frames. All right, guys. So how to bound this indicator? So we really like this indicator. We're really happy with its construction, and we really want to apply overbought and oversold signals. Now, here you can see I've applied a line. Let me just get rid of this, remove this a minute, and remove this. Here we go. So I've applied what I did earlier, a resistance. So traditional resistance line, right? So we have a, yeah, no worries, Shadrach. Okay, no worries. We have a resistance level at 0.01410. This is a resistance, right? On the MACD, clear resistance. Come on, guys. Anyone can see this is a clear resistance, near resistance, resistance. So by the time we have this area and this area marked up, and also a near test of this area, we know there's a good chance of price of the indicator turning from here. So these are predetermined overbought and oversold. Overbought in this condition, but if you want an oversold condition, you would look, okay, here, support, near support, support, So we know here we have potential support coming into the nearby now. But as I recommend with all trading strategies, support and resistance is a very tricky concept if you're relying on just one single line, one single price point. So look, why don't you just include the areas? So we start here again. We include this area here. As you can see, let me just zoom in a bit. We include this area here. So now we're working with a zone. This point, this point, this point, point here, point there, point here. We have a massive overbought zone now, right? And then we could have looked for a crossover signal within here at this point. So a signal line crossover as we talk. So look, as you can see, we have a signal line crossover, signal line crossover, signal line crossover. What a lovely, lovely signal that would have been. But price didn't react that much. We did see a drop, but not really anything to get excited about. Look, the same with the oversold area. Again, we can include all of the troughs, all of the low points. Okay, so we can include this one, and now look what's happening on the euro dollar right now. We are now considered in an overbought area because of our predetermined support. So if we get, so let's see what's happened. So as you can see, the Macd line is now testing our support area. Look, we've not seen anything that the euro is on a free fall right now. So I do not anticipate much to be seen from this point, but we are testing parity and we have bounced from parity. So we could see a bullish signal line crossover. Now, what's a bullish signal line crossover, guys? We should know what that is now. That's the blue line crossing the orange signal line. So we have overbought, oversold levels. Okay. Any questions on how to apply these? You can even go further out, guys. Look, you can even go further out and really take in the history. Look at this history here. Let's go to the weekly chart and see how big this overbought. There we go. Look at this. Overbought, overbought, overbought. Oh, no, I shouldn't have done that. 1 second. Sorry, guys. All right, let me zoom back to that. So we have overbought, overbought, overbought here as well. Near touch there, near test there. It's just like looking for a resistance area, guys. Nothing really else. Overbought, overbought. It's crazy. This area is insane. Overbought, 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 overbought. So we know that this area is highly likely to see the indicator turn lower as if it approaches it. So if price ever gets up to this point again, if the indicator, the indicator gets up to this point again, we know there's a really good chance of the indicator turning lower from here. But right now we are working between these two areas here. Okay, that's all there is to it. Nothing special, just looking for traditional support and resistance areas. Resistance is a point in the market the indicator has turned from. So at least twice, you look for at least 2 points of resistance to form. So just think of it as a ceiling. So here we have a ceiling, here we have a floor. Floors and ceilings, guys, that's all support and resistance is. Right, finally, we're on to what's known as divergences. Now, this is where things get really interesting. Guys, if there's any questions on what I've shown so far, do ask, because that's what we're here for. We're here to help. So, divergences, right? So, this is where, as I've said, this is where really is this indicator and the RSI and things like that really can help. Some analysts use the peaks and troughs of the Macd to conduct divergences. As you can see, as you can see here, we have the Macd peak. So Macd peak forms a high, then a lower high at this point here, okay? But look on the chart. Let's get a line going. Look on the chart. So from this point here, we have what? We have a higher high. So a high, higher low, higher high. High, lower, lower low, lower high. So what's happening is this higher high is not confirmed by the Macd. It's quite simple, guys. And look, you can see it here. The upside momentum, remember, this is a momentum gauge, right? So momentum is really strong here. You can see it. Momentum, upside momentum. The buying pressure is really strong at this point. And as you can see, it begins to diminish at this point. Now, Divergences, this is a regular bearish divergence. Now, I've cherry-picked this to make, this is a perfect example. Are they always like this? Certainly not. All right, a divergence signal is simply a warning that upside momentum is beginning to slow, and this could trigger a subsequent drop to the downside. All right, so that's all it is. All it's showing is weakness to the upside. That does not mean price is guaranteed to turn lower. Right, so what about for bullish divergence? Well, we can see, let's find a nice one for us. There is one there, but I was hoping for a better one, to be honest. There we go. Yeah, this is a nice one. I really like this one. Now look at this. Here we have, this is bullish divergence, regular bullish. This is regular bearish divergence, where you see a higher high formed in price that is not confirmed by the indicator. And we form as you can see here, a lower high. Now, bullish divergence is taken from this point here. Now, sorry guys, I should have pointed this out. Let me zoom in. So when you're marking up divergences, analysts make the mistake of joining the wicks or the lower shadows of the candles. So we don't do this, guys. We do not do this because of what? The indicator is not measured by the highs or the lows. It's measured by the closing prices. Remember, the 12-day and 26-day EMA is measured based on closing prices. Okay, not on highs or lows. So we join up the highs and lows to find out if we had a drop to the downside that was not confirmed on the indicator. As you can see, it was not. We had a low, we had a higher high, then we had a higher low. At a time, we had a lower low. Okay, so although we have downside momentum here that's made a lower low, this is not confirmed on the indicator, which means this part of this momentum at this point here is slower than what it was here. Okay, so downside momentum is beginning to diminish in speed. So the speed of price change is beginning to slow. And as you can see, we did turn higher to the upside from this point here. Okay, bullish divergence. We also have something called hidden divergence, and this is where price action almost takes the lead. So as you can see here, this is a leading indicator. We have this is the regular bearish divergence, which, as you can see, the indicator is taking the lead, right? It's leading. It's telling us, oh, there might be a problem here. Upside momentum is beginning to slow. This is a leading signal. This is warning you that price could be turning lower. There's also something called hidden bullish or bearish divergence. Now, hidden bullish or bearish divergence is a little bit different. This is where you'll see, for instance, this one is, let me make this a little bit smaller because it's a little bit too big. Okay, so, right. As you can see on the indicator, we have a higher high here and a higher high there. Higher high, higher low, higher high. But on the indicator here, joined from the closing prices, guys, we have a lower high, lower low, and a lower high. So the lower low at this point here on the chart is telling us that although the indicator is showing us that momentum is to the upside, price is not showing us that. So it's almost hidden to the analyst that's only focusing on regular bullish and bearish divergences. So price takes the lead here in terms of the indication of a lack of momentum. So with that, and just to be clear, the hidden divergence signals are generally seen within a continuation signal. So as you can see, the bullish and bearish regular, so this is bearish regular, are generally reversal signals, as you can see, reversals. And the hidden divergences are normally found as continuation patterns. So just remember, guys, hidden divergence, this is the hidden bearish divergence. We look for a lower low in a lower high in price, as you can see here, lower high in price. So we have a low lower low, lower high, lower low, lower high, and a continuation to the downside. But meanwhile, we see a higher high within the MACD indicator. So price leads the indicator at this point. Now, for a bullish hidden bullish divergence, what you'll see is a lower low in the indicator. So I haven't found an example of that on this chart, but we have a lower low on the indicator, and we have a higher low on the price chart. Again, guys, all it's showing is price is leading the way. Price is telling us that the buyers remain in control, despite the indicator telling us that momentum could be slowing. Momentum is to the downside. Right, so with that in mind, just to remind you guys, closing prices, do not mark these divergences up incorrectly, okay? 90% of the analysts do this, and I do not understand why. I think they're just following everyone else, but this indicator is based off closing prices, so we need to follow how they're marked up. Right, so you can use just another technique. You can use trend lines and support and resistances on these indicators to give you an additional boost. So let's take this line here. Let's use this as a trend line. So as you can see, trend line, break to the downside, and the retest here. Look at the retest there. Let me just move this over here. As you can see, we retest the underside. So we have a trend line support extended from this point here. We break to the downside. We retest the underside of this trend line, and then we get a mild sell-off, okay? As you can see here, sell-off to the downside, test of the underside of that trend line support. So you can apply trend line support as well as support and resistances to this indicator. And it can give you an additional way of analyzing the market. Let's extend this one and see what happens. We had a break to the upside here. This was almost a fake out and really didn't get going. So we pushed below here. So there's not really much we could have got from this, to be quite honest with you. We did get. Let's stop moving now. Not sure why that is. Just bear with me. Nope, it's not letting me take it. There we go. So as you can see, trend line resistance taken from these 2 points here. We did see the indicator pull away from here, but it wasn't a perfect rejection. But look, we did pull back from this area, and again here, and again there, until we broke out to the upside, which didn't really give us much of a signal. All right, we did get a pop higher here. Wasn't really anything to get excited about, though, was it, guys? This is in terms of the indicator. Now, from the indicator itself, would I use this indicator in isolation to take trading signals? Most definitely not. You should not be doing that. These are designed as confirmation. These are designed to offer confirmation to the price movement. Just to give you an example, let's see what we have here. I think there's a support that lined up. So this is the regular bullish divergence, okay? Just to be clear, guys, as you can see here, this divergence, let me just move this back. I forgot to mention that. As you can see here, this is the regular bearish divergence, right? And look where it formed. Around that overbought area, additional confirmation, bearish divergence, overbought zone, sell-off. Okay, let me see if anything kicked off here. No, we didn't get much at this point here. But look, that's a prime example of what I mean. Do we have anything there? We also have something here. If you look at this point here to that point there, high, low, lower high, higher high at this point here. So there's higher high. So we have a high, low, higher high, very, a mirror opposite of this example here. High, higher low, higher high. Join the closing prices, and we have a regular bearish divergence within the overbought zone, guys. So another area you could possibly look for long bearish opportunities, and look at the sell-off from that area there. Absolutely wonderful. So just to show you where you could have looked for this. So we have support at this point here. So we have support formed here. We break to the upside, resistance, support, support. Just say from this point here, support, near support, resistance, turn support, then we have support at this point here. Now, this support level is now confirmed with bullish divergence, right? Remember, regular bullish divergence, lower low, measured by the closing prices though, guys. Lower low, higher low on the indicator. We have a bullish divergence signal off this support level. Additional confirmation, guys. That's just one way you could use this. You can apply it to any trading system you look at. You can even use this indicator to confirm other indicators. You know, in my personal opinion, you should not really combine this with the RSI or another momentum oscillator, because it will roughly give you the same signals, especially on the same time frame. Now, you could use the RSI on the monthly time frame to combine with this, no problem at all. It's just using the Macd, the RSI, and the stochastic together on the same time frame. It will practically give you the same signal, and it won't give you any more of an added edge, if that makes sense. Right, so guys, are there any questions? I'm going to spin things back to the there we go. Okay, here we go, guys. So I hope you can see that. Let me just check that you can. There we go. Right. There we go. Okay, so Q&A, guys. Any questions? I do not see any in the chat box. If we understood all of that, that's fantastic. If not, do ask me now. I'll give you some time while I'm going through the ending parts. Please do type in your questions, and I'll get to them in a minute. So, upcoming webinars for July. We have the Quasimodo formation. That's another way of applying support and resistance, right? So this is a different way, a different way to look at support and resistance. And this is available on the, this will be live on the 19th of July. We also then have the Quasimodo pattern part 2 on the end of July on the 26th, guys, at the same time, right? There's no change in times. Also, comments and feedback, guys. Any comments, any feedback to for this session? Support team at fpmarkets.com, or alternatively, market analyst at fpmarkets.com. Guys, in regards to a recording is available. Just make your way to the FP Markets YouTube channel. Just type in FP Markets on Google and it will come up. Okay, all the archived webinars are there. They're all available. Alternatively, go to the main website and look at the find the main menu, and the webinars will be under the resources tab, the archived webinars. So everything's available for you. You can rewatch this. And if you have any questions in regards to tonight's content, look, just pop me over an email, and the team will get back to you as soon as they possibly can with a more detailed answer to your questions. Right. I'm just going to check if there's any questions, guys. I do not see any. You are more than welcome, Caro. I hope you enjoyed it. I hope it was useful to you. I hope it was useful. So look, if there's no questions, you're more than welcome, Erwin. Glad you enjoyed it. Any questions, guys? As I said, I'm here to help. I know it can be a bit difficult through a presentation, a live presentation like this, to understand everything. So again, watch the recording, go over it, send me an email if you have any questions. Just fire them over to me, guys. It's no problem at all. Oh, thank you very much, Mishak. Thank you very much for your message. And Shadrach, thank you very much too. Thanks, guys. So look, I'll bid you a farewell then, guys. Thank you very much for taking the time out of your evening to be with us tonight. We really appreciate it. Please join our Telegram channel, guys. Our Telegram channel is active every day. You can find that either in the link in the chat box, or alternatively, look, main website, guys. It will be in the lower left or lower right area of the website, and you can simply sign up there. Instant updates, guys. I'm pretty active on that Telegram channel, posting setups and things. So please make your way over there if you want to join. One final check for any questions, guys. You are more than welcome, Raphael. You are more than welcome. I'm glad it's been of use. Let me just check the Q&A Fantastic. We're all covered. Right, guys, have a great evening. Have a great morning or afternoon, wherever you're from. And look, once again, thank you for joining me this evening for me. Thanks, guys. See you later.